then let's hear it out from Vivek Mathur, CFO of KFIN Technologies, who we spoke with, talking about their outlook on earnings, deal pipeline, and what the client demand trends are like.
On the margins, if you look at Q4 margins, they are ahead of 45%. And we believe that, it's a seasonal blip that comes in the first 2 quarters of the year because of, the usual increments that you give, but the corresponding revenue growth comes up in the later quarters. And that's why you see that the uptick will happen. So there is no negativity about the margins. It is only going to grow with the market supporting it. And, we believe that if the market continues to do well, we will do upwards of 45% on a year-on-year, sustainability of the margins. And if our international, efforts work out well in this year, and 3 years down the line, we see the margins going nearing towards 45 to 50% range. If the market is not supportive, they will be in the 40 to 45% range.
Vivek, I want to understand on that last part of the point which you made, that you've been taking efforts to, go beyond Indian borders and also get a significant part of your business overseas, Indonesia to start with, some others. Tell us, what's the grand plan there? If we were to talk about the efforts which you're taking in the next 3 years, what percentage of your revenues would start coming in from overseas market? And also, are the yields and margins higher there? Because the premise you're making that your margins may have upward bias if all efforts fructify to almost 40%. What's the basis of that?
So if you look at the yields in Southeast Asia, our yields are 5.2 bips, vis-a-vis 3.7 bips in India. And we have an escalation clause where we can actually increase our pricing, which is unlike what you do in domestic mutual fund clients in India. So we already have a headway because there is no competition in terms of outsourcing of RT activities in Southeast Asia. We believe today we may be having just 5% of our total revenue coming from Southeast Asia, and other international business put together about 10% of our revenue is from international business. We want to take it to upwards of, around 20% with TA and fund administration business, not only in Southeast Asia. We are actively looking at, acquisitions beyond Southeast Asia in Europe and US. So, currently we are in the process of setting up subsidiaries in Thailand and Singapore and Philippines. And once that is done, the parallel work which is going on in terms of M&A is to grow inorganically in Europe and US. And if you look at Indian market, the fund administrators get paid about 2.5 to 3 bips. But in the international market, it's anywhere between 6 bips to 25 bips. So there is a huge opportunity for fund administration business. Of course, it is competitive in international market, but I think we have been doing this business of managing funds and corporates and their back-end activities for over 37 years. And with the growth in the AIF and international business over the last 3 years, we are confident that we will be able to disturb that market and get the arbitrage of outsourcing fund administration to India. While international fund administrators are already present in India in terms of their captive being outsourced, there is no Indian company which has been able to set it up on a global basis. We want to be the first one.
With that, then, we'll wrap it up on this leg.
If you like this video, then like, share and subscribe to ET Now.